It's show time. Hello. How's it going? I'm Russ. Thank you for coming back to the weekend dividend dive. It's going to be a little bit of a different tone because, as you'll see, I received this message from our new friend, and he shared with us on a recent live stream that he watched, or she, it doesn't say. First time listening to this podcast, and you ramble too much. So, with that being said, what we're going to do now, because yours truly rambles too much, we're going to make a thought, try to keep it poignant and pointed, and then we're going to sit in quiet contemplation of what should be said next. How has your week been? Terrible, right? Anyway, I thank you doing what's right, number 8. And I did ask for a tip on that. You didn't respond, but hey, you know what? What can I say? If I ramble too much, I'm just being me. Like I shared in the newsletter, right? I want to be the first and best version of myself, the first rate version of myself, and not the second rate version of someone else. So, hey, you know what? If I ramble too much, maybe there's some other meditation channel or something you can watch. But again, it's me here, unless I'm talking with somebody. I'm sitting in front of a camera for an hour. I got to fill space because dead air, it ain't going to work so well. You know what I'm saying? It's just not going to work so well. What did work well is Team USA won the gold medal. We had Jack Hughes with the golden goal. That was fun. I was texting our friend Craig. Poor guy. He's a Canadian. He's a Canuck up there. Are they all Canucks or is that just in Vancouver? I don't know. These are the kind of hard-hitting questions that we tackle on this live stream. We do some investing news and whatnot, but congratulations to Team USA. And it's funny because we was watching the game this morning with my daughters. It's like I'm like, we did it. We won. And I'm like, where's my medal? So I taught the kids about how the gentlemen on the ice and those behind the bench and the trainers are the ones that did it. They'll get the medals and the accolades. We just sat on our asses and watched them play. So whatever help that was for, roll my sleeves up. I did my part, helping to get, screw Connor Hellebuck stopping all those shots. I did my part to help get Team USA over the hump while I was eating breakfast. I'm eating my eggs and some potatoes, right? So, yeah, let us, thanks, Alad. I appreciate that, man. And again, this is something, it's easy. No, it's simple, but not easy to be yourself, especially when you're on something like this. So teaching my teenage daughters, be yourself. It's so much easier to be yourself than trying to be somebody else or something you're not, right? I know you guys would get it. And you know what? Yeah, Vasco, I mean, you get people, and here's the thing. I don't know anything about that person. There are people you meet in life that just rub you the wrong way. Maybe it's the sound of my voice, maybe the way I look. I don't know. I can't control these things. Well, to some degree, we can control the way we look. But again, story time, teaching my daughters, right? They don't like their voices. I'm like, hey, newsflash. I hate the sound of my voice. I don't like it. But you know what? I didn't choose it. This is the voice I got. Move on. Next. And that's all I got to say about that. To quote the late, great, is somebody who never existed, late and great, if Forrest Gump didn't exist, but that's all I got to say about that. Glad, Kevin, we'll look it up. Is that Gladstone land? So if it is, it's a BDC. Hey, we had Warren Buffett on the thumbnail. I did a video and I like it. I was, again, texting Craig saying it's funny that I had put about probably 4-ish hours into that video. And as of right now, it's probably going to make less than $2, or as of right now, what it's made. But you know what? I don't care. I enjoyed it. If there's one person that got value out of it and learned something, because I sure did, that has value in and of itself. Whiskey, I didn't watch curling, but it's funny. There's people that I work with that are apparently curling experts all of a sudden. And it is funny how we can just become experts on these Olympic events every 4 years, and then they go away and everyone forgets about it. But Chris, yeah, man, it's funny. I would add on to that they say like the greatest, and I got this from Aswath the Motorin. He said the greatest sin that an educator can make is to be boring. Am I an educator? I don't know. Maybe part education, part entertainment. We have a few laughs. We learn what went on in the world of investing. Like we saw Berkshire Hathaway sold 77% of their stake in Amazon, but Berkshire Hathaway also lost Todd Combs, one of Buffett's investment lieutenants. And that was more than likely, as I read a Barron's article, that was more than likely Todd Combs' position. So oftentimes when you have managers like this doing a certain thing in a certain part, they'll sell, they'll take it with them, which makes me think, but if it's good, why not keep it? I mean, just because Todd Combs left. So they didn't sell the whole thing. It wasn't a major position. Dude, Mash, where are you in Alaska? Are you in Juneau or Fairbanks? That's the only two places I think I know. And Mount McKinley, but they called it Mount Denali now, right? Or no, Denali is called McKinley. I don't remember. Be yourself, but you join the Navy. I'm not sure I take it, man. I did, Yes, I did. I did join that Navy. Suzuki, what's up, man? It's been a minute. Watsco, right? Sir, I'll direct you to the one and only Ryan Williams' channel. I was going to say Kevin Williams. Ryan Williams, he's the Watsco guy. And they looked solid. That's another one I missed. That's the problem, I think, with having, and I don't know if you run into this, just tons of stuff on your watch list. You don't know what to buy. There's so many things that look appealing. And again, I don't want to run into the situation of having 500 stocks, my own S&P 500, right? Yeah. Oh, Gladstone Capital. Yeah. Oh, you're right. LAND, I think, is Gladstone Land. So Gladstone has a few. So we can look at that. Dresh, hey, man, I can ramble with the best of them. I try to keep it on point. And I know what that game is. It's kind of like a weird version of seven degrees of Kevin Bacon, where I can look at anything and then it's not special to me, right? That thought will lead to a different thought, and then before you know it, we're 7 degrees away from where we started. And again, Amazon's been on my list, and I made this mistake with Google when it was in the 160s. I understood the business. I liked it. There was uncertainty around it with the AI, right? So I thought that I had too much exposure through the S&P 500 because Alphabet. Did I say Google? Alphabet, Google, whatever. It's such a big part. We all say Google, don't you? I always forget to say Alphabet. But Alphabet is such a big part of the S&P 500. I figured I already own enough of it. So, but because of that whiskey, I've got my eyes on Amazon. And, dude, how about all you guys? Thumbs up if you get Amazon packages multiple times a week to your house still. We get so many that it's funny we'll get a knock on the door. Amazon, if we don't have a package come once a day, they do a wellness check on my wife to make sure everything's all right here. So that's how much, we order from Amazon a lot. And you wonder, will it get too big that all of a sudden it's smaller companies can do a better job at that? And I've heard people say, if all you have to do is not be lazy and do a little bit of shopping around, and you can find a better deal on Amazon. But dude, they've made that thing so damn sticky. Just click, 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 right? Just tap done, and it's at your house sometimes later that day. So I don't know. They could get dethroned, any company at any time, right? Yeah, Alid, TJX. I I almost did it. I came close around 155 to buying them because as I was thinking about it, I just want to own more great businesses. The cool thing about TJX and Ernie Herman, their CEO, has been at the helm for a while. Fantastic leader. The cool thing about TJX is that they seem to do well when the economy's good and when the economy's bad. When companies like Walmart or Target or whoever it is has to clear out their excess inventory, they're not going to just throw it in the garbage in the dumpster. They're going to get something for it. They have to make room for the new things coming in, for the new seasons, the new hotness, right? So TJX is there to buy at a discount and sell to you at a discount, but they're obviously going to mark it up a little bit from what they bought at. And it's just that cool thing that their purchasers at TJX, they never know exactly what they're going to get. So it is that treasure hunt aspect. You're going to get something on a deal at a discount, name brand items. When I was in high school, they used to say, well, it's something's wrong with them. And funny story, because I bought a pair of Brett Favre Nikes. I had wanted them forever. And then one day, this is, yeah, I didn't have a lot of money back then, but I saw them at TJX and in my size. And whatever, they were a fraction of the cost. And I remember just like bending. I couldn't find anything wrong with them. So I wore those things I had them in the Navy too. I remember. I don't know what happened to those shoes. All right, everybody, we're going to play a game called First, Best, Last, Worst, and it's around shoes. So don't play. That's a fun card game. You see how the mind works here, what I'm dealing with. You can go. If you're in a long car ride, just pick a topic. Kiss could, well, yeah. I don't know how your relationship is with your significant other, but yeah, first, best, worst, and last. Like just shoes. First pair of shoes. Don't remember. Too small. Best. Yeah, maybe those Favres. I don't know. Anyway, boring as hell, right? We could do it with stock. First, best, worst, last. I don't remember the first stock, but I do remember one of them. My wife asked if we still, or do we own Boot Barn? I was like Boot Barn. I bought them for a swing trade in 2018, and I held them for a few weeks and made like $3 or $4. Yeah, it's well over 100. It was in the 20s and it's 180s now, I think. Ticker BOOT. Buy and hold. It works, people. Buy and hold. So, yeah, I guess those are my thoughts on TJX. They're just such a solid company, and I can show you. I'll show you the chart real quick, Alid, on them. We'll pull them up on. I'm trying to write and talk to you at the same time. We'll pull them up and look at them. But let me get caught up to you guys. We're going to jump into some news from Simply Safe Dividends. What did you buy? I did buy more Aries Capital because there was a little bit of panic selling going on. If you get the newsletter, I shared my quick thought that I feel that I'm buying the fear and not the problem, right? So Blue Owl 2, what is it called? Anyway, it's one of their private, non-publicly traded portfolios, right? Their platform. I can't think of the word to call it, but people wanted their money and they didn't have it. So they had to sell things at 99.7 cents on the dollar. They gave people their money back. And it's a little bit of a different jam because it's a non-publicly traded. There's no liquidity concerns when you buy an Aries Capital or Hercules or Main Street Capital. You want to get your money out, you just sell. So now obviously that doesn't mean they're risk-free, but the problem with the Blue Owl halting redemptions and all the other publicly traded BDCs, it's not even the same thing from what I can tell. I probably should do a disclaimer at the front of this, right? That this is not. Anyway, Danny, you got all your individual stocks. Oh, you got all into individual stock. That's a lot of eyes, man. You can't do that to me. Got all into individual stock in my taxable account. We'll flow through it like that. No ETFs. You're going the opposite way of a lot of us. A lot of us are consolidating into ETFs. Finally sold CTO Vasco when it went into the green. I don't remember CTO, but I can hear my voice on this stupid thing. You reduced your exposure to REITs and returned to your ideal level of 16 stocks. Hey, REITs have been the new hotness, right? Everybody's wanting to get in, rotating into REITs. And with the tariffs, well, I guess they weren't paused. They're at 15% now for at least 150 days, unless Congress wants to extend them. I don't know what your guys' thoughts on that whole hubbub was. I like it because I think that's what makes this country great. You guys know I have libertarian leanings, but I don't want any one person to have too much power without being checked. That's what made this country great. That's weird saying, like, made it? It is. I think it's still great. I like this country. If it was a hellhole, if it was a flaming pile of what, I don't think I'd stick around. But yeah, my roots are here. Anyways, the Congress has the power of tariffing foreign countries. That's who should be making, okay, if it's an emergency thing, it could be short term, but it's not supposed to be permanent. So, and I'm not a political channel here, but I don't know. Those are my thoughts. So REITs could be doing a lot better. And what was this cost of living dividend I heard about where we could be getting Americans could be getting $2,000 checks back from the tariff rebates? It's going to be in the courts for years. What are they saying? Could potentially be 5 years. Trim down to 10 stocks and one ETF when you hit your first 100K. Hey, and it's interesting. I was listening to Terry Smith. I shared that Behind the Balance Sheet podcast, and he was saying for his fund, they need at least 20 stocks, but they're never going to go over something like 35. So they're always going to be in this sweet spot. And yeah, what a problem to have. It's hard for him to find things to buy. I think he said the lowest a company's market cap has to be about 10 billion, because some of these small or mid-cap companies, if they want to start a position, they'll just own almost the whole company, and they don't want to do that. So that's the problem Warren and Charlie would talk about for years and years and years, is when you get so big, it becomes a drag on performance because it gets really hard to find things to move the needle. You have to start looking bigger and bigger, and eventually you go so big. So then they could just start buying up companies like Walmart eventually, right? Oh, eBay. What did eBay do? They bought Depop, right? Do you guys use Depop? I've never heard of Depop, but they bought Depop, I think, from Etsy, and they sold it for a smidgen of a loss. But I think it makes sense that eBay can use their technology and their platform to plug in and help grow Depop. Any thoughts on Booking? The only thing I know about Booking is that I think they're going to do like a 50-for-1 split. So I wouldn't, not going to change anything about the business, the split. But yeah, I don't know. I mean, I guess we could take a look at Booking. I know they've been down a whole bunch. Trivon. And yeah, I'll throw those down. All right. Couple more here, and then we'll do some news. The news you can use. Oh my God, look at you guys. Fast and furious. I love it. Billy Black hardly getting Amazon packages. Oh, guy who doesn't use self-checkout. Dude, I'm scanning the comments, and for some reason, I thought you said you don't use Elf on the Shelf. I don't know why my brain saw that, but I was like, okay, weird. That's the kind of weird things you're into, Hey, you don't have to share that here, but it's cool. You're with me on ARK. Hey, we could be wrong, but I think they're one of the stronger BDCs. Yeah, TJ Maxx and Marshalls. Dude, I love hearing that. You like grabbing the golf shirts from TJ Maxx. I do see a lot of them there. And I'm talking myself into it now, of course. And I was just telling my wife about TJX that 2 years ago, I was saying the exact same thing that I am now. It's run up for a few years. It keeps hitting all-time highs. It just looks so dang expensive. Get in the DeLorean and go forward 2 years to this very day. I told my wife, it's been going up for a few years. It keeps hitting all-time highs, and it looks too dang expensive. I said, I'm not the brightest bulb in the box, but that sounds like a pattern to me, and I could be missing it again. Steve, yeah, BizD, as long as you're okay owning the buckets of yuck, the ones that cut a lot. For me, I would just rather try to pick a couple of the stronger BDCs. I did watch the video from Brian Bollinger and Simply Safe Dividends, which you guys should check that out. They shared which ones they think will cut, which looks stronger. Surprise, surprise, some of the stronger looking BDCs are Ares Capital, ticker ARCC, Main Street Capital, ticker MAIN. They had Hercules in there, which Kelly Green, I'll be talking with her eventually again soon. HTGC, those were three. I think they had a couple more in there of the stronger ones. Tux, you finally bought Abbott. They had been dropping a lot. And you also bought ADT. Yeah, a lot of you are buying ADP. Automatic technology platform, right? They automatically process that data. Hey, give us some analysis on ADP. Here's your analysis. They automatically process data, and that is what they do. What about Walmart? They're marts for walls, you know? You buy it or you don't. All right, let me get caught to you guys here at the bottom. A few more dip buyers. Home Advantage. Hello. Thank you for swinging on in. I like buying dips, and that's another thing. I really need to keep a trading journal. I'd like to know if you guys do, because another thing I always say is that I catch myself, I'm really attracted to fallen angel stocks, companies that we know, companies that were doing very well and have had a very steep pullback. I'm very attracted to them. It's my weak spot. It's my weak spot. Just like, you see mini skirt and boots, it's, we all got them, right? I shouldn't have took a sip of that, and I just yelled in your ears. Note to self, don't drink steaming hot water. Don't put those fluids in your head. Not too bright. I'm like, but I could smell it. I'm like, it smells so good. Hey, Mike, what's up? You got Mike in Naperville, like the nape of your neck out there. That's over here. Depop, I believe it is a Gen Z, not millennial. It's a millennial or Gen Z. It's like a thread up where they can buy recycled clothes. So it's almost like an eBay, but for clothes. And Gen Z, I believe, predominantly uses it. So Moody's, MCO, right? I think Berkshire still owns Moody's, and they are, Turbo, I don't think it's just for women. It is just a Gen Z platform. I think that's a good way to describe it. If somebody has a better correction, it's like an eBay for clothes, for fashion. Good. Cleared that up. I love it. I got to get to news here and a couple more. You guys. Turbo, you think software companies like ADP are dropping because they believe it's going to be replaced by AI? You are correct, sir. And this is the problem, that the whole AI, and especially coming with agentic AI, there has just been a massive boulder dropped into the pool of SaaS companies, tech companies, and we don't know which ones got crushed. We can't tell yet because the water's still settling, the ripples are pools still going everywhere, and we don't know yet. So the market's making their bets on which companies they think are going to be hurt, which ones are going to go away, which ones are not going to recover, which ones are going to be helped, which ones did the waves and the ripples push on to higher ground. So, and again, it's going to be some years before we can tell. And you know what? A lot of people, they like to invest in things that they have some degree of certainty on and predictability. But when you have this massive, again, technological innovation dropped into the pool of tech companies and the tech landscape, hey, it changes it. And right, it might be some creative destruction. If ADP were to go out of business, but it was replaced with something better, that's fantastic for the world. Not so good for people that work at ADP or are shareholders of ADP. But I'm a believer in capitalism, and that's what it is. That's what it's all about. Creative destruction. We need it. And again, Terry Smith talked about in the GFC, Name, he made a joke of it. He said, name me all the companies other than Lehman Brothers that went under. He's like, I'll take a sip. And the answer is nobody. So think how bad and nasty that was. One company, really major company, went away. Intuit, it's interesting. We're about ready to do our taxes too. And yes, we could, I could see it being replaced. I mean, is there a day when you just upload all your tax documents into Perplexity or Gemini or Claude and it just, boom, just does your taxes? Here, that's a good one, actually, because we had Claude Legal, right? How hard is it to imagine? This is what you should do when you invest. Can you envision something being created to easily and quickly replace what Intuit does? And I know they have more things than TurboTax. It's not just TurboTax, but I really could see Claude, the folks at Anthropic, literally just making the replacement to TurboTax, and it'd be Claude Tax, right? And they would go away. It would really hurt it. And they could do it cheaper and better than TurboTax. Will that happen? I don't know. Nobody knows. But yeah, and again, with paychecks, could be something similar. Dresh, that 5% yield, remember, that's an accidental yield, and the market is literally telling us, hey, we're really skeptical on this company, and yes, they pay a dividend. So we're not really convinced that we want to buy this stock. So the stock price has to keep going lower. And when that happens, right, the dividend yield goes higher. And what happens? It's an accidentally high dividend yield. So you are taking on more risk to hopefully be compensated for that risk. But that yield is telling you, red flag, do your damn due diligence, Dresh. I thought it was slick there with a bunch of D's. Nobody wants it to be. Yeah, I agree, man. Or D's. You're man. You're not a man, but yeah, we'll see, right? Adam, what do they say? You know this better than me. It takes markets sometimes about 3 days to digest any major news. Well, the Supreme Court striking down the tariffs, and then the president putting in his own 15% tariff. That's going to be good for 150 days. That's definitely, that's definitely going to be FPS. I don't think I know them. All right, you guys, I love it, man. You're keeping me going here. All right, dude, bro, man. Hello. I got a lot of news there, so we might have to go quick. It won't be as quick as last week with Craig. That was insanely fast. So, Adam, we don't want to get into a deep philosophical conversation here, but that is interesting because if it were to replace almost everybody, if it were to replace plumbers, what are we going to do all day? We need something more than leisure. And I think that's one of the dangers that people talk about with the universal basic income, just shooting people, shouldn't say that word, just sending people money to exist, to do nothing. People need to feel a sense of purpose, I think. And that's why a lot of uber wealthy kids that don't have to work or don't have to do anything, they start to go a little crazy because they don't feel like they have any purpose in life. And you know what? Is that the right answer? I don't know, maybe. But Adam, I don't think it'll replace all of us, but who knows? Anyway, let's do some news. I could have some more thoughts on that, but so this is going to come up here from the land of simply. You could do it. You can do it. There we go. Press the right buttons, finger. What do they say? Come on, use the smart part of your brain. Well, there we go. We use the smart part of my brain to get this done. All right. Now, there's a lot to get here, so I'm going to have to go fast. Pause the video. If you want to see anything here in detail, would simply say they give their own proprietary valuation score and whatnot. But Genuine Parts, they raised their dividend for the 70th straight year, but they also got a downgrade because they are going to split into two companies. and one is on global automotive, the other on global industrial. So once upon a time, I owned Genuine Parts. People are like, well, I can't read it. What do you do? There it is. Read it. All right. No, we haven't had anything to drink yet. I'm just high on life. And you being here, you motivate me. I went to see a Slipknot cover band yesterday, and people were moshing in this tiny little bar. And the band said, you motivate us. So 3M gets a dividend upgrade. Look at that. Yeah, I'm not going fast enough here. All right, want to get all this. There you go. It looks like they stole the YouTube play button and turned it black. They painted it black. But ADI Semiconductor Company, 11% dividend raise. They are a beneficiary of the semiconductors. Unilever, they're separating the ice cream business. A lot of you know that. So they reaffirmed their safety score. This is Simply Safe Dividends, which, by the way, you can use for free. Just go to simplysafedividends.com and put in an email address. Notice I said an email address. Is it un or an? An email address, and you can use it for 2 weeks for free. Insperity, they reaffirmed their safety score. Yeah, the HR companies, human resources, they've all been just obliterated. Look at that. I got to pause on this one for a second because they give an expected valuation of at least $105, and it's at $23. So the market is extremely it's like that scene in one of my favorite movies, 28 Days Later, where they're in the church and they're going up the stairs and somebody spray painted on the wall. It says, the end is extremely effing nigh. And it didn't say effing, but we're going to keep this friendly for the algorithm. So people think the end is extremely effing nigh for Insperity. Sherwin-Williams, this is a company I think is going to be around for a long time, right? Even the robots, the Optimus Prime robots are going to still have to. I know it's Optimus, but the Optimus Prime robots are still going to have to paint something. They're going to want to be painted, right? Can't have a robot just all shiny metallic. The robots will need paint. It's boring. Think there'll be gay robots? They want to have some pizzazz and some color, right? They're going to want some fuchsia and all those fun colors. Oxy, another Warren Buffett jam, raised the dividend 8.3%. There you go. Walmart, new $1 trillion member of the $1 trillion club, raised that dividend 5.3%. I always gotta say percent, right? It gets boring. Coca-Cola, look at this. They're all coming through. 4% dividend raise, 64th consecutive annual increase for Coke. Multifamily REIT, we're getting close. Essex, ESSX, 93, 0.8%. All right, that's a token dividend raise there. Might want to see why. Newmont Gold Company, world's largest gold miner, 4% dividend raise. I know a lot of the miners have those variable dividends, which is pretty smart because, hey, when the company's making hand over fist, they're paying it a bigger dividend. But when times get tight, well, that dividend's going to get rebalanced and rebased. So PPL, I always thought PPC Ian should own PPL. 4.6% dividend raise. Electric utility company. Isn't that like Pittsburgh Power and Light or Pennsylvania Power and Light? Something like that. Thank God I have a pop filter on this. There it is. LyondellBasell. A lot of us have talked about it. They finally cut the dividend in half. And that one we all saw coming from a mile away. And then they refreshed their outlook on Unilever. And I want to get to a couple of these for you guys to go through very fast because you've been patiently waiting just to see what they give on this. Glad this is Simply Safe Dividends again, by the way. 21, unsafe. I don't know if you're chasing the 9.79% yield, but for me personally, Aries is yielding right around 10% now. I think they're a little bit safer. And yeah, look at the dividend history, cut, flat. But they haven't raised it. 22. And let me just see their yield is, yeah, it's way above, or not way, but above the normal. Earnings payout ratio high. And that's why they cut. They very often pay out more of their earnings to the dividend. So, not for me. I don't know what you'd be thinking about with that, but Watsco is going to be solid. Ryan has been buying Watsco. Uh, Looks overvalued. I know it's the data centers, right? That's giving them the boost because they got to be cooled. Right? You can't have a hot data center. The dividend growth really fast. I mean, just solid. So you should have got in on this when Ryan did. I don't know what else to say. If you're watching Ryan Williams, he was buying it, and I don't know. I think maybe you missed the window, but yeah, solid company. But I didn't like this though. Yeah, their free cash flow payout ratio is over 80%. I think they're spending a lot of money though. That's why the free cash flow went down. They're really trying to grow the business. But hey, Ryan Williams goes live every Friday night. I know he's done videos on Watsco. He's a little more plugged into them. Yeah, I don't like that. Flat sales, it's slightly coming down. They keep diluting the shareholder. I don't know why. Margins are good, and they have no net debt, which is very, very solid. So good company, but there's actually a few red flags, and that reminds me of why I did not buy them. Alid TJX. TJX. Yeah, 80 safe. It's overvalued. And I don't know if I should wait because I said it 2 years ago, but see numbers we can pull up really quick. Yeah, see here, even recession sales, 1.8%. They increased their sales during the 07-09 recession. Why? Because when times are tight, people still need clothes and home goods. TJX, right, owns Marshalls, TJ Maxx. They are in Europe. TK Maxx, is it? I forget. But they did cut that dividend when they were forced to close their stores, and something that never happened before. But then you can see they quickly reinstated it, and it is way above where when they cut. So just a very strong company getting ready to raise that dividend again. Looking a little overvalued. Yeah, it's just by almost every metric you can use, it's almost double the PE of the consumer discretionary category. But yeah, low free cash flow payout ratio. I love the free cash flow payout ratio for most companies. REITs, BDCs don't apply, but and banks. But the free cash flow payout ratio, with that free cash flow, that's where the dividend comes. You can pay a dividend. You can carry it as cash on the balance sheet, buy back shares, buy other companies, reinvest it back into the business. So the free cash flow, I think, is the lifeblood of the business. And I like to see that free cash flow payout ratio low, like it is for TJX. And yeah, it's just, solid. Everything up to the right. They buy back shares. Their sales go up every year. Margins are great. And it is just a very solid company. Debt could be a little bit lower, but it is, you know what? Here you go. If somebody new is watching, and I know you don't know what interest coverage ratio is, the interest coverage ratio is just awesome because it tells you how many dollars of operating income, which is also known as EBIT, your earnings before interest and taxes, does a company have to cover every $1 of interest on the debt? Currently, TJX, what we're looking at here, has a whopping $92.70 of operating income to cover every $1 of interest on their debt. Why is that important? Well, you legally have to pay the interest on the debt, because if you don't, you're going to go default on your debt. And very bad things happen when companies default on debt, which is why a lot of companies cut that dividend if they're having problems with that. And then the last one here, booking for you, Trevon. I like you, Trevon. 70 safe. I've never dug into this company. I just know that they always seemed to be expensive. One thing we'll look at here is a lot of people may say $4,000 a share. I'm going to guess they have probably less than 50 million shares outstanding. So there are less shares to spread the earnings over, which is why you will see that. And then they'll do splits. Yeah, they just started paying a dividend. And I think if anyone knows, put it in the chat what the stock split is going to be. But there you go. They're hitting you with $38.40 of annual dividends per share. But again, I already know it. There's not, well, look, they're at the 52-week range. They're low. yeah, solid, very low free cash flow payout ratio. That they can easily grow that dividend leaps and bounds for years to come. And let me just see if there's anything really wonky. Sales pulled back a little bit, but still low teens. The sales growth, sales are still going up. I mean, that's strong to see. There you go. 32.6 million shares outstanding, which is not a lot. So there's a lot of earnings to spread across not a lot of shares, which is why you have that high, quote unquote, high share price of over 4K. But yeah, margins are just outstanding. Really strong company. And I don't know offhand. Now, see, that's interesting. Their interest coverage ratio is a little bit low. $5.87 of operating income to cover every $1 of interest on the debt. And if times get a little rough, then that could start getting a little hairy. Again, you got to have you want a lot more interest coverage. But yeah, and I don't know how right this is. This shows they have no net debt, and that their net debt to the earnings before interest, taxes, depreciation, and amortization is 0.22. So another way you can look at that is you can say it would take less than a quarter of a year if they used their EBITDA to knock out the net debt. So it would take a quarter, less than a quarter. So they easily could eliminate all their debt. So strong company, but I don't know why they've been beaten down so much. So tariffs, I don't know. But now I bop back to you guys. And yeah, when I go off screen like that, a lot of you don't talk amongst yourselves. Let me see if I can take a sip of this. Yeah, Trevon, FactSet being down, ticker FDS. Ryan and I were talking about that one, but again, man, I could see AI replacing it. I really could. And Duffy, he'd be at the bowling alley all day. You could, man. It sounds good. It sounds good, but honestly, I was going to say, do you think you could bowl every single day for 10 years straight, or 6 times a week, 5 times a week? Duffy's over here. He's like, let me try. I'll give it a shot. Let's see. But you would think that after a while, you would want to do something else. It would just get boring. Everybody, what if everybody's just bowling 300s all the time? You're so good. It would be boring, right? Like the first person to not bowl a 300 would lose. Yeah, merged it with AI to enhance ourselves. Who knows? It could be machine and man. Deez. Yeah, if anybody just jumped on, what Deez is talking about is this fun comment I got on a live stream where they called the live stream a podcast, but they said I just ramble too much. And I so badly wanted to say, I think you missed another O there on 2, but we don't do that. We take the high road. So that's what that joke was about. I ramble too much. So I had said when it came on, I'm just going to make a point, and then I'm going to sit in quiet contemplation and really think hard about the next words to come out of my mouth to prevent rambling. But yeah, I don't know why they such a low raise from Sherwin-Williams. That's another thing, dude. You guys be concerned, right? When a company gives a way lower than normal dividend raise, which let me see what I know I don't have this on the screen, but Sherwin-Williams has, that's actually really, really low. Well, I'll show you. I don't know, right? They show me, don't tell me. Was that a Rush song? I always say that. Yeah, I think that was a Rush song. I know some of you guys like Rush. I hated Geddy Lee's voice when I first heard it, and then it kind of grew on me. But yeah, here we are looking at Sherwin-Williams. Yeah, itty bitty teeny tiny microscopic dividend yield. And so there's the dividend growth I was talking about. You have a 10-year CAGR of almost 14%, a 5-year CAGR of 12%, and then 1.3. Let's see if we can do a little snooping and find out why. I don't know if I don't know why. Free cash flow payout ratio is very low. So I don't know why the heck. Maybe we'll. Yeah, you know what? We will see if Seeking Alpha can clue us in why. Yeah, I don't. This is Sherwin-Williams. Sales growth has gone real low. Sales are slightly increasing. 250 million shares. Outstanding. Yeah, just from these very quick looks, see, net debt, debt's a little bit high, but they're still able to cover the interest on it. Let's really quickly. This is Seeking Alpha. So I'm on with you guys, and I just started reading the trending analysis about OMAH. Remember, I did a video against that, saying it's good covered call income ETF, strong distribution yield, short track record. But we're here for Sherwin-Williams. That's what we came here for, to see if they're not going to give us it. Quant gives it a hold, but the analysts, why some see downward potential, don't paint over. Or likely matte future for shareholders. Well, sometimes the analysts will give the reason why. Stingy 401k changes. All right. Well, weak housing market to pressure top line. That was from July. So you'd have to dig into it. We didn't learn enough to see exactly why then. But catching up. Guten Tag. And that's all I know in German. I should know more. I'd like to go to Germany one day. PAG. Oh, speaking of bracing, I've never looked at PAG. Maybe what time we got here? All right, we got time for PAG. We can pop on them in a minute. But yeah, I will actually probably not be live. No, I shouldn't say probably. I won't be. Next Sunday, I will be in Tampa, St. Petersburg, Clearwater, Florida area for the IndyCar race. So my niece wants to go to college to be she loves F1. She's super smart. My God, the kid has forgotten more about math and numbers than I will ever know. But she's a senior in high school, and my niece wants to help design engines and F1 for F1 cars and work on F1 cars. And so she's looking at engineering schools. But anyway, she loves IndyCar and the F1 cars, so she wanted to go to a race. And as you guys know, my family has a condo. My wife's family has a condo in St. Petersburg. So there's going to be an IndyCar race, and my brother-in-law is like, "Hey, why don't we go down to the race? We'll spend the weekend." And all of us are like, "Go down to Florida in February, and we have a place to stay that we don't have to pay for." Twist my arm. I'm not really a big race fan, but so anyway, we're going a few days early. We're gonna do a long weekend in Florida, but we're coming back next Monday. So a week from tonight, I will be probably coming back from or eating or something after the race. So won't be a live stream. Not even going to try. I know in the past I've wanted to, but it's just not the same. So unfortunately, I'll look at Penske and MI Penske material. Don't know, but we'll look at PAG. That's Penske Automotive Group. Good. When you go to the U.S., Billy, yeah, you're over there in Philippines, Costco TJX. I didn't see that one where Futurama episode where Bender turned into Gender Bender. Look at Suzuki. You're the one who told Ryan about Watsco. Somebody also told me about, if you're in the chat, I got to know I forget which one of you told me about Comfort Systems, ticker FIX. I think it was in the $400 range. Now it's over $1,000. Netflix, man, I only know from just reading about it a little bit, hearing about it, and we use it. We use it every week. Everybody uses it, but I think the rub is just the Warner Brothers deal. I mean, they're spending a lot of money potentially for it, and Yeah, I was listening to a podcast. It might have been Invest Talk, or I think it was Invest Talk. Whoever it was, they did a chart reading and they said that they would be very interested in Netflix if it pulled into the, I think, high 40s or low 50s. Will it get there? I don't know. But um, yeah, hey, some of the Nag 7 companies, right, are starting to Trivon, that I think that is Booking Holdings 25 to 1. So see, what's 4,000 divided by 25? That's what the share price will be. So if you guys don't know, if you have one share of Booking Holdings at 4,000, they will take that back. They will divide it, cut it up into 25 pieces, and you will now have 25 shares, but it will be the exact same amount of, when you add up the dollar amount, it will be exactly the same as, well, when it starts trading, it'll change price, right? But that's yeah, it doesn't change the valuation. It doesn't change anything fundamental about the business when it does a split. It's just the, right. We've shared the pizza. You could have a pizza with 8 pieces, and now I take it away. I cut it into 50 pieces and give it back to you. It's still the exact same size pizza. So that's the only thing. It's to try and encourage more, I think, options activity, and people think they can afford a whole share now. So, if you see $4,000 a share, too much, but then people it's like, oh, $120 a share, whatever it'll be. A lot more affordable. I can do that. All right, sorry, I'm gonna blow past some of your comment here. That's why I want to know. Thank you. The fear for booking is that AI agents will take over and reduce booking to a utility-like company. What people miss is booking is now a fintech company that earn money from interest and currency conversion. That's interesting. Yeah, I could see that. So AI, though, will almost certainly be a disruption to its business model. That I think is then where the issue is. But Duffy, 3. And my daughter's a bowler, and she hurt. She didn't get to finish her season in high school. Filmalek, what are the odds the Bears will be playing in Indiana? Hey, it's all about money, man. People up here, there's some people up in arms. They can't believe it, but right, the New York Giants and the New York Jets play in New Jersey. They play over the border. But I think the nutshell is that Indiana is telling the Chicago Bears, hey, we'll build you a stadium and you'll pay lower taxes. Come on over here. Just, it's like a 27-minute drive. Come on. And the Bears are like, hey, that sounds pretty good. And Chicago's like, no, stay here and you build the stadium and pay higher taxes. So, it's business, right? And money likes to go where it is respected the most, I think is how a saying or something like that goes. Oh, it already has. Dude, it already has. Not my welding, because I drive to a location and I have to assess what's wrong but for the assembly line work, it's already replaced people. Yeah. There you go. Show me, don't tell me is a song of Presto. Cygnus, I got to get to your Penske group. I'm going to do that. Vasco, it could. Nobody was hot and heavy on AI, 3 years ago? I mean, yeah, obviously people have talked about it, but the whole world wasn't just constantly like more piece of pizza. Hey, there you go. Just the size of the pizza didn't change, though. It just, wait, 50 pieces, I'll pay for 50. No, so what is it then? 4,000. Oh, dude, I was so close. I said 120. It's 160. Hey, maybe my niece is rubbing off on me, right? Thank you. Thank you, Turbo. Yes, that's what I was thinking about. Cars have been painted, probably welded too, when it's that very assembly line thing, just over and over the same thing. That's definitely AI robots. And again, hey, all robots don't have to look like humanoids. And I've heard people say, when you make a robot that looks like a humanoid, like it's our minds like to see that, but it may be a drag. Like when they talk about the Amazon robots in their warehouses, they say if they were to look like humanoids, then that would actually be suboptimal. It wouldn't be the best way for them to look. So, kind of a cool thought. And what an exciting time to be alive. And speaking of exciting, we're going to look at, before we get out of here, we'll look at Penske Automotive Group, because I have never looked at them before. So PAG, good old PAG. Penske. Wow, dividend yield is way up there. All right, let's see real quick. 50, borderline safety score. The recession sales were down 26%. They cut the dividend during the last recession, but they have had some monstrous, oh my God. What is the deal with that dividend growth? That is crazy. Did they just win the lottery or something? Fall into money? Is it no, it's a quarterly dividend, $5.60. And the share price is currently $167. That's such a high yield. Again, I've never looked at the business, so we can just look at a few of the numbers here, which can give us, this is actually what I do for a lot of companies. If numbers look good, then I'll dig into them. But yeah, free cash flow payout ratio, though, has been coming up, but they've been raising that dividend super quick, though. So that's why as the free cash flows come down and stayed the same, they raised the dividend a lot. So that's why that yield is going up as well. But low single digit sales growth, buying back sales are going up. It's not terrible. The return on invested capital could be a little higher. Wait, that's a performance of a gauge of how management is allocating capital and investing it. But I believe that return on invested capital is just, I'm having a brain dump. So ROS is capital employed. That's all debt and equity that's available to the company. I think I don't know. I can't think right now. Either way, ROIC is an interesting number, and it should be a little bit higher according to Simply Safe, but free cash flow margin. So 3 cents of every dollar coming in the door in sales is making its way to free cash flow. So should be a little higher. Net debt. I don't know what they do. I know they have the Penske, right? Oil and interest coverage ratio. There you go. Should be higher. So would need to dig into it a lot more. Automotive retail. Oh, there you go. Easy to understand. Commercial truck dealerships, franchise agreements. Okay, that's cool. Kind of like Domino's, franchisees, insurance products, service contracts. They distribute heavy and medium duty trucks, engines. Yeah, I see the yellow trucks right on the roads. So plus they own, I think they own the Indianapolis Motor Speedway, right? The Penskes do. Somebody better tell me that, because I'm not getting off until. Wait, who missed the decimal point? Is it not one? Oh, so it is 160. Okay. So booking, when they do the split, post split, it will be 160. Amazon's going to, yeah, they could have, right, 1 million robots, I heard. They already have, or they're going to, and it could eventually be 2 million. Oh, and then they'll sell them. Hey, the bot will deliver itself to your house, and then it'll just, cook you a meal, right? So yeah, guys, I'm going to keep them on my watch list. I'm going to keep Amazon very close eye on it. And it's funny. It makes it feel like they are so big and such a big part. Did I give my thumbs up again? Anyway, I don't know if I want to make the same mistake with Alphabet, but I don't know. We'll see. I like it. Kevin's already like, all right, well, thanks a lot, man. Well, he's like the vaudevillian Kane that's pulling me off the stage already. I'm still talking. He's already playing the music. I'm giving my acceptance speech at the Grammys or the Oscars, and they're already playing me off. And I'm Keep on. Oh, dude, I'm gonna end on that. Ramblin' Russ. Why didn't I think of that? That's the gold star comment of the Turbo. It's coming. They will. They eventually will. I would, in the next few years, they're gonna do that. So, all right. Well, we're gonna play myself right off here. But instead of that music, I play myself off with the one, the only Pee Wee Herman. So I love Pee Wee's Playhouse, and that ending song is fantastic. So unfortunately, you're going to have to wait 2 weeks until we hang out again. But thank you so very much for coming by. And hey, we'll do it all again. So be good, and look forward to seeing what the market brings us this week. So see ya.